Good evening, everyone. More than $100 billion. That's how much the damage from Hurricane Katrina and the ensuing flood in New Orleans could end up costing. The estimate was announced today by Risk Management Solutions, which had originally assessed the cost of Katrina at $25 billion. But that was before the levees burst in New Orleans, flooding at least 150,000 properties, according to Risk Management. In fact, the firm says it's the most damaging flood in U.S. history.
The situation in New Orleans indicates that actually probably people weren't sufficiently informed about what the probabilities were that this event could happen and what the consequences were actually going to be, because the consequences, I think, are now proving to be much more significant than anybody had actually thought through.
Meanwhile, Congress pledged $10.5 billion to fund the relief efforts in the Gulf Coast region. Nearly all of that money is earmarked for the Federal Emergency Management Agency. $500 million goes to the Department of Defense to help the victims of Hurricane Katrina. The president called the measure a small down payment for what will be a years-long rebuilding effort. Stephanie Dew reports.
Walking the storm-ravaged streets of Biloxi, handing out hugs along the way, President Bush saw the devastation and heard from survivors of Hurricane Katrina. While he admitted the results of the relief effort were inadequate, he promised to repair the region.
We got a lot of rebuilding to do. First, we're going to save lives and stabilize the situation. And they're going to help these communities rebuild. The good news is, and it's hard for some to see it now, that out of this chaos is going to come a fantastic Gulf Coast, like it was before.
But there are rumblings that rebuilding New Orleans may be a mistake. House Speaker Dennis Hastert questioned if it made sense to rebuild a city that sits 7 feet below sea level. He later clarified that, saying he didn't mean New Orleans would be abandoned or relocated. Still, Hastert's comments infuriated members of the Congressional Black Caucus.
We are rebuilding Baghdad, but we got a Speaker of the House who says he questions whether we should rebuild New Orleans. Give me a break.
On Capitol Hill, lawmakers were promising to rebuild.
Beyond this initial installment of funding, we will provide for humanitarian relief as long as the victims of this storm need it.
Lawmakers are also considering the long-term economic impact to the affected states and the nation.
And I suspect that means some kind of stimulus package out there to be sure that we see the economy move forward as it needs to rather than it might in response to this disaster.
But for now, the focus is still getting the victims of Hurricane Katrina the food, water, and medical attention they need. Stephanie Dew, Nightly Business Report, Washington.
The monthly employment report is a look back at where the economy has been. And the report for August, released today, looks good. But with hundreds of thousands of people left homeless and jobless in the wake of Hurricane Katrina, a big question remains over the future employment picture. Scott Gervey reports.
The economy added 169,000 new jobs in August, and the unemployment rate fell to a 4-year low. Manufacturing lost jobs, but other sectors gained, led by leisure and hospitality and construction. In addition, the report sharply revised upward the job creation number for July, and the unemployment rate of 4.9% is lower than the Federal Reserve's expected 5% for the end of the year. It is a strong combination.
I think what this report tells the Fed is that growth, both in GDP and in the labor market, were quite solid heading into the hurricane. That's all we can learn from today's report, but that signal is quite positive.
But the report says nothing about the elephant in the economic room, the future impact of Hurricane Katrina on jobs and the overall economy. Hundreds of thousands of people are out of work in the hurricane's aftermath. Many face long-term unemployment and may have to move to find work. But new jobs for cleanup and reconstruction will be created. Even gathering statistics for next month's employment report will be difficult in the affected area where government offices have been destroyed.
At this time, we're being hit with this major uncertainty. And I think the only clear thing you say about the hurricane effects is that it creates a major uncertainty. Even once, if we could move ahead, by a month, and if we could do this interview and look back, we would still say, oh, these numbers we're looking at now reflect major uncertainties about what's going on in the economy. So policy is going to have to deal with this situation. And so the most obvious thing is that policy is going to become much more careful and much less aggressive.
The hurricane's destruction cuts growth in the short term, but the reconstruction will add to it later. And the short-term effect on prices increases inflation. The Federal Reserve will have to sort through all the conflicting data when it meets next to review interest rates on September 20th. Scott Gervey, Nightly Business Report,
New York.
Wall Street initially showed a slightly positive reaction to the employment report, with the Dow rising 16 points at the outset of trading, while the Nasdaq gained 2 points. The market then lapsed into a narrow trading range until a sizable drop in oil helped boost the Dow to a 32-point mid-afternoon gain. But caution ahead of the long holiday weekend led to a late slump, so the Dow Industrial Average closed down 12.25 points at 10,447.37. This week, the Dow rose twice and fell 3 times for a net gain of 50.08 points. The Nasdaq Composite lost 6.83 points today, ending at 2141.07. It also rose twice and fell 3 times this week and advanced 20.30 points overall. The Standard & Poor's 500 was down 3.57 points, ending at 1218.02 today. Over in the bond market, the 10-year note fell for 30 seconds to 101 and 21 30-seconds, putting the yield at 4.05%.
Some big help is on the way to relieve the American energy crunch. Energy Secretary Samuel Bodman said today that President Bush has authorized the sale of 30 million barrels of crude from the Strategic Petroleum Reserve, on top of the 9 billion barrels previously loaned to several oil companies. Bodman also said that Europe will dip into its emergency stocks of gasoline and oil to help the United States. The International Energy Agency will send 1.1 million barrels of gasoline and 2 million barrels of crude per day to the U.S. for the next month. Joining me now to talk more about these developments, John Felmy. He's chief economist of the American Petroleum Institute. Hi, John.
Good evening.
To what extent do you think that this influx of crude and gasoline will help our situation?
Well, all other things equal, adding more supply to market generally helps the conditions. The SPR loans were very important because we had refineries that were still operating that were starting to run out of crude, and this additional crude supply in the market could really help.
How long will it help?
Well, it's going to help as long as it continues. Right now they're talking about a 30-day window, and so over that period at least it could help the market conditions.
At what point will we see prices at the pump come down as these refined products and gasoline start getting distributed through the system?
Well, at this point, it's hard to say, but one important thing that has happened is we've seen the futures price of gasoline drop by over 40 cents a gallon over the past 2 days. Now, we know that retail prices tend to follow the futures and wholesale prices, so we'll have to see how soon they respond.
So what do you think will be the direction of prices next week?
Well, at this point, we've had very good news over the past week. We've seen pipelines begin to operate. We've seen crude import facilities operating again. We have barges running and so on. So the system is recovering from what was a real body blow.
Now, John, we've heard stories of price gouging in some markets. The price of gasoline has gone up by $1 overnight. We have people now going into a long weekend where many Americans like to drive for the holiday weekend. What do you think that they can expect in terms of prices on this holiday weekend?
Well, at this point, what we've seen is, of course, the futures market had reacted very sharply in the beginning of the week, and so futures prices went up by over 60 cents a gallon. The spot market went up even more. And so that was reflected in some retailers' costs. Going forward, as long as consumers are prudent in their use and purchase of gasoline, we should see adequate supplies. But we'll have to see how things proceed.
What if they're not prudent? What if people are filling up their tank even though they don't need the gasoline? Are they contributing to shortages?
Well, we've learned from the 70s that when people filled up, topped off unnecessarily, lined up and, essentially bought more gasoline than they needed, they can really drain the system even when you have things functioning normally.
So do you think that we're on the verge of an energy crisis, something like what we saw in the 1970s?
Well, the difference between now and then is one of the reasons why we had such an energy crisis in the 70s was because of a self-inflicted wound. We had very bad energy policy that had price controls and allocation controls that created an artificial shortage and created that crisis. Now we have a very real shortage that we're working our way through, And as long as we're able to keep working as hard as we can, we'll be able to rectify some of the supply problems.
Can you give us a little update on the supply situation? I know at the time of the whole Katrina catastrophe, 9 refineries were down, 3 major pipelines were interrupted and disrupted. Where do we stand on all this now?
Well, the 3 major pipelines have been restarted to some degree, either between 60 and 90% of capacity. So we're getting crude flowing, we're getting refined products flowing. The 9 refineries are still down. We've had word that a couple are starting their restart procedures. 3 of the remaining ones appear to have at least some degree of damage. But what was important is that the local utility has been able to restore power to those refineries, and so now we can actually begin to restart.
Okay, still a lot of work to be done. John, thank you very much for coming on the program. Appreciate it.
My pleasure.
We've been speaking with John Felmy, Chief Economist of the American Petroleum Institute. Production ground to a halt today at the world's largest plane maker as the mechanics union went on strike against Boeing. Early this morning, strikers set up a picket line outside the company's Seattle plant. Boeing won't build any planes during the walkout, focusing instead on supporting its customers. The two sides are far apart on terms for any new contract, Paul, with the union calling the company's last offer, and this is a quote, insulting.
The last mechanics strike against Boeing was 10 years ago, lasting 69 days, Susie. We'll see how Boeing stock fared in just a moment as we take a look at our stocks in the news tonight. The New York Exchange volume leader on 40.4 million shares, Albertsons, up $2.32. It's the nation's second largest grocery store chain, and it's exploring strategic alternatives, including the possible sale of the company. Prudential says Kroger and Safeway could be potential suitors, but it's more likely they would buy just some Albertsons stores. The stock traded as high as $25.95 during the day. GE second in volume, up 19 cents. Pfizer a 3-cent gain. ExxonMobil lost $1. Some profit-taking time in some of the major oils today. Let's have a look at some of the others in the group. Chevron down just a fraction. ConocoPhillips and Marathon Oil, bigger losses there on some profit-taking. Then we see Hibernia down $1.23. There's speculation that the New Orleans-based bank's acquisition by Capital One may be scuttled by Hurricane Katrina's damage to its facilities. That's just speculation. That was fifth in big board volume. Valero Energy down $1.07 on some profit taking. Walmart stores fell 45 cents. Citigroup 17-cent gain. Merck edged up 42 cents. And AMR, parent of American Airlines, down 8 cents. Today, Goldman Sachs downgraded AMR from outperform to inline, citing the high cost of fuel. There we finally see Boeing down $1.65, as you heard, shutting down production because of the mechanics strike. And then another weak group was the coal group, Arch Coal, dropping $2.01. Morgan Stanley said the strong fundamentals of the coal industry are already discounted by the price levels of the stocks. Let's have a look at some of the other in the sector. Consolidated Energy, Massey Energy, and Peabody Energy, all down over $1 each. Then Textron, a 12-cent loss, although earlier in the day the stock was as high as $72.95 after Merrill Lynch upgraded it from neutral to buy, saying the recent sell-off in Textron has been unwarranted. Meritrans Incorporated up $2.47. This company operates tankers and tugboats in the Gulf of Mexico, and all of the company's vessels are operating at pre-storm levels, and they had no physical damage. The crews uninjured. Good news for that company. Esterline Technologies, which is involved in aerospace equipment, had third quarter earnings jump to 55 cents versus 33 a year ago, a penny above the street estimate, but sales missed street projections by $1.6 million. Microsoft topped the active list as it has all week on NASDAQ, down 18 cents today. Then Google jumping $2.20. Intel 2-cent gain. Cisco Systems up 7 cents. Dell was down a nickel a share. That was fifth in dollar volume. Oracle up 8 cents. Apple Computer a 4-cent loss. eBay down 25 cents. Amgen moving up 26 cents. And Qualcomm 10th in dollar volume down 4 cents. Neoware Systems up $2.87. It's in software solutions, and the company's fourth quarter earnings 14 cents, 2 cents better than the street expected and way up from only 3 cents a year ago. On top of that, the company sees 2006 revenues jumping 30%. On the downside, Ashworth Incorporated, this is a company in the sportswear apparel marketing business, and it had a third quarter loss of 24 cents a share versus earnings of 4 cents last year. And on top of that, the company cut its 2005 earnings estimate from as high as 82 cents all the way down to 15 cents a share at best. And those are the stocks in the news tonight. Susie?
Thanks, Paul. The markets are closed on Monday for the Labor Day holiday, so we'd like to invite you to join us for a special look at China. Our holiday program, China's Century of Change, profiles some of the people who will lead the Asian nation into the next century. They come from all walks of life, rich and poor, urban and rural. Here's an introduction to one of them, an entrepreneur who runs China's largest private auto parts company.
His name is Lu Weiding. If you're in the business of building cars, you may want to remember it. Lu is CEO of Wanxiang, the largest private auto parts maker in China. But he also sells and manufactures around the world.
With the development of the Chinese auto industry and the auto industry worldwide, Wanxiang would like to quietly play a supporting role. That's what we Chinese say. From a business perspective, Wanxiang would like to serve all auto production companies, providing them with quality, competitive prices, and excellent service. Every firm is my customer. I hope that more and more cars on the road will use our parts.
Count on it. Wanxiang expects its worldwide sales to jump 23% this year to $3.7 billion. And there's more growth down the road.
Find out where that road leads on Monday in our holiday special, China's Century of Change.
Here's a look at what's happening next week. Our Friday Market Monitor guest is Randall Ely, president of the Edgar Lomax Company. On the economic calendar, Wednesday, July's wholesale trade numbers come out, and President Bush meets with China's President Hu Jintao. Thursday, the Energy Department releases the latest crude oil and gasoline stocks.
My guest market monitor this week is Robert Stovall, Managing Director of Wood Asset Management based in Sarasota, Florida. Bob, welcome back to Nightly Business Report.
Thanks for asking me back, Paul.
As a Wall Street veteran of some 52 years, give us your assessment of the stock market's behavior in light of the sharp recent jump in oil prices, rising interest rates, and now this national tragedy, namely Hurricane Katrina.
I think the market has held up remarkably well. The bond market is certainly firm, money flowing in, money that's frightened, and the stock market you see the expected groups have been strong, those that will benefit from rebuilding and from energy search, and those that have to pay for it are not doing too well. But
so on a scale of 1 to 10, with 10 being the best, how would you rate the stock market's behavior?
Right, the last few days I'd rate it about an 8. For the year so far, it's more like a 7.
Oh boy, well, you're quite impressed then overall.
I've been on the negative, cautious, opportunistic side, Paul, all year, but I'm getting a little more optimistic.
Will this cause the strategy, cause the Federal Reserve to stop boosting rates in the wake of the hurricane?
They could, of course, but my guess is that they'll make up their mind on September 19 or early in the morning of the 20th and decide to proceed with further with their 25 basis points increase and probably have an extensive statement about the current situation and how it looks a few days from now, and maybe warn people that rates will not go up much more, if at all, for the balance of the year.
Well, that would be bullish for the stock market and the bond market, for that matter.
Yeah, I think so, but I'm gathering that we'll end up the year with short-term money costing about 4% interest rates,
okay.
and that'll be a level from which the new chairman who succeeds Mr. Greenspan can cut when the next recession comes along. You can't cut much when you're down too low.
Okay, how about oil prices? Are they close to topping out?
I think we'll see an oil range, Paul, of $60 to $75 a barrel for the next several weeks or longer. And then next year would be some fading and maybe from $50 to $65 a barrel. But it'll be expensive. It's not going to get cheap again.
I understand. Now, on your last visit with us in late August, you gave our viewers 4 stock recommendations. Let's see how they performed. We see Chubb Corporation up 26.5%. That was a great call. And Weyerhaeuser up 4.2%. Are you still with those two?
Yes, I think Chubb is one of the better insurers and will have another good year.
Okay. Then you had 2 others that you gave us, and just one of them was a loser, and that was Sabre Holdings, down 19%. That's the airline reservation company. Are you out of that?
Yes, I've given up on that one.
Okay, and how about Freeport-McMoRan Copper and Gold?
That moves up with copper and gold. It's up a little bit. I think it could go up some more, and we still have it in our wood asset portfolio.
Okay, so that's done very well. 3 out of 4 is good batting average. 750, very good. Any new buy recommendations, Bob?
Yes, Paul. I do have 4 new ones, and they're connected with energy. 3 out of 4. I own every one of them.
Okay.
And they're in the wood asset management portfolio too.
Mm-hmm.
And my first one is a utility that's 65% earnings coming from oil and gas.
Energen, I see.
Energen, E-G-N, Energen, yes, it's down in Alabama.
Okay.
And my number 2 favorite is Neighbors. That's
an oil driller, right?
Neighbors is a land driller. It doesn't drill out over the water.
Okay.
And but it has a great order book built up.
And that trades on the American Exchange, does it not?
American Stock Exchange, and it has a great symbol, NBR.
Yeah, I like that one. Very good indeed. Okay, 3 and 4, quickly.
Quickly is Tiffany, my favorite retailer. It had a great earnings statement the other day. It helped our monthly performance go up more. And I think it also could be involved in a combination air long.
Okay, and then Noble Corp.
And Noble Corp is also an exploration company.
Okay.
It's a contract driller, global. And the business is going to be good. We have to spend more money looking for oil and gas globally.
You personally own them all, right, Bob?
I own them all personally, and they're all in the wood portfolio.
Robert, I want to thank you for your input to the program. It's been a pleasure.
Thank you, Paul.
My guest, Robert Stovall of Wood Asset Management.
And recapping today's market action, the Dow lost 12 points and the Nasdaq fell almost 7 points. And to learn more about the stories in tonight's broadcast, go to nvr.com. And that's Nightly Business Report for Friday, September 2nd. I'm Susie Garoff. Have a great holiday weekend, everyone. And the same to you, Paul.
And you too, Susie. I'm Paul Kangas, wishing all of you the best of goodbyes.
Nightly Business Report is made possible by Franklin Templeton Investments, providing a unique perspective through the specialized investment expertise of Franklin Templeton Mutual Series and Fiduciary Trust. Franklin Templeton Investments. Gain from our perspective.
Don't let your nest egg get away from you. Objective financial advice can help. A.G. Edwards, for 118 years, fully invested in our clients.
This program was made possible by contributions to your PBS station. from viewers like you. Thank you. For more information about investing, you may order Nightly Business Report's home video, How Wall Street Works, by calling 1-800-535-5864. This program is available in either the VHS or DVD formats.
We are PBS.
Funding for local broadcast of Nightly Business Report has been provided by viewers like you and by the following.